Hello, folks. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. Today's market trends on Thursday, August 14th, 2025. Hope everyone's having a great afternoon. We're going to be doing this, will be our last one until after Labor Day. And want to just also share a few quick disclosures with you in the chat as usual. If we're going to tradestation.com, you scroll down the homepage, you'll see a link to today's rundown as well. I also want to remind you that TradeStation is preparing to launch Titan X, the next generation of our trading platform. It isn't just a new model of our award-winning software, but a fresh trading paradigm that puts you in the cockpit like never before. Titan X will be available to customers as a beta soon. If you're new to TradeStation, you can join the waitlist at tradestation.com/Titan-X or see the link in the description of this video. Okay, it's great to be with everyone. We're showing you here some standardized returns of some of the ETFs we may be talking about. And we will now jump over and show you. If you go to tradestation.com and you scroll down the page, you can see here value stocks rally on Fed hopes and M&A. And this market is just kind of staggering around here. As you look, here's our article. We're going to be covering some of these things, and here is the downloads. If you want, you can go to this zip file. Inside the zip file, there's some ELDs, the easy language documents, which contain custom studies. Once you have those, you can then load some of the workspaces we have here. We're going to be using MT main and MTES. So this is standardized returns. I'll jump over to the key ETFs very quickly also. And I would just say overall, when we look at this, um, you know, you never want to fight bullish momentum. And, there are reasons, though, I think, to be kind of less enthusiastic about things at this moment. The seasonality and the inflation are, some potential issues. But the other thing I will say is if you look at the American Association of Individual Investors, I mean, today we had the most bearish reading since sometime, I don't know, back in April or May or something. So everyone is worried and everyone is bearish. There's, always potential for a wall of worry. So we don't want to be overstated in terms of potential negativity out there. I want to just kind of emphasize that. So my initial kind of view as I look overall at the market here, I have this workspace, which is actually the chart more or less from our article right here. The article we actually have, this is the chart from it. And what I always just, I mean, from my perspective, you look at this entire move here that we had basically from the 1st of August up to here, you know, people might be looking for, a move down toward kind of 63.49, 63.50 as an area. I mean, this is not to say that anything bearish here, but we're also at a spot where, there's not much of a pullback here, and we're sitting above this level. And I think at this point, it could sit and extend from here. But also, if the retail sales report tomorrow is something that makes people, not wanting to be long at that moment or a little more bearish, we do have some potential here that we've been holding this rising 21-day exponential. So, I mean, we're above this level. And, from my perspective, I'm just kind of looking here and, there's nothing here that gives any real reason to be overly negative. And I think that these factors may remain in place for a while, but there's no confirmation of any of them actually playing out yet. So let's see. All right. Now, I also want to take a look over here at the big thing, which is in some ways, this is some weekly charts we look at. And I'll start off right off the bat that we have this. Basically, we were talking about when we do our state of the market on Mondays, we look at the big indexes and the big sort of sectors. And what is interesting to me is we had identified a level on the Russell here, and we're trying to get above it. So I think that this is actually very interesting to kind of see that we are trying to kind of move above this. If we look at the 10-year Treasury, which remains, kind of big issue here, it still is holding above 420, and I think this is going to be simply an overall sort of factor that we need to be aware of. I mean, if you look at the inflation data, I mean, it's difficult to really paint an overly dovish picture. There's a lot of political pressure, but today's producer price index was very high, and if you look earlier this week, I mean, the CPI was not really that wonderful if you really want to be dovish, we had core CPI year over year 3.1%, which is, above the 2% target of the Fed here. So my view is, as we look, is it essentially, the market is at a point where technically there's nothing overly bearish. However, at the same time, some of the actual kind of fundamentals, you could say, behind it might not be as positive. So I think we're just in a spot here where we have to realize that the index itself can make small moves to the upside and drift higher. And in that environment, individual stocks can kind of pop up and give opportunities. However, at the same time, you know, in the summer, especially with some of the catalysts coming up, there are things that could become more problematic. We do have a retail sales report, and then on Wednesday we have Fed minutes, and then on Friday of next week we have Jackson Hole and Jerome Powell. So those are just kind of things to be aware of. And I think, like I said, when something is extended at this point in time, it's not there's nothing bearish, but at the same time, there are sort of things that might prevent sharp rallies at the level of the indexes and might make people more focused on the individual sort of names. So what is also interesting, if we look over here again at the VIX, is the VIX yesterday hit its lowest level since kind of back here in December. I thought it was kind of interesting. If we actually look at the VIX, I'm going to extend this arrow, and you can actually see that these were the lowest levels in the VIX here since back here in December. So, this is very much your classic stock pickers market, low volatility sort of environment. So I think that's kind of an interesting sort of thing to look at. But if we also look at the S&P now on the weekly, we really see there's nothing that gives a bearish sort of look at all. So I think it's important that this is kind of classic wall of worry behavior. We see the sentiment falling and getting more negative, and then at the same time, we see the data being negative, and then we look at the overall S&P, and we see very little evidence of a breakdown occurring. And we continue to kind of have this drift to the upside. So this in many ways is, wall of worry summer behavior. And then we do have these catalysts that are coming up. And from my perspective, we need to just kind of look for things that are kind of clear opportunities. And right now, I'm not really sure I know exactly what they might be. There were some things we had identified that have kind of worked to a certain extent, and now I think we're kind of looking for more things. It was interesting to me also. I'll just point out that some things we had talked about, in particular things like the extension of communications, that we had identified in State of the Market, how this was sitting above the weekly levels, and now we get some real extension in it today. And one name that actually did pop up that I did want to mention very briefly, I'll just jump over here before I forget, is Netflix. This has been a name. I had strong earnings report. We did a trading view idea on it when it pulled back, and it kind of pulled back more than we expected, but now it is showing some signs of potentially kind of resuming its uptrend here. So it's interesting to see if we actually look here as well. I don't have it on this chart, but the 8-day exponential moving average is just now crossing back above the 21-day exponential. Netflix, communication stock, is one of those stocks that's off a lot of people's radar, and it also here does essentially give some potential. People might see in this some potential for this to turn back to the upside. Look over here on the weekly chart as well at Netflix. It's interesting. Last week, if you look at Netflix, it actually had a bullish outside week. Not a lot of people. I think this stock does not get traded nearly as much as it used to, but it still is showing a lot of signs of steady sort of weekly up. The weekly chart is showing a lot of steady sort of upside. It has not gone away yet. Looking at some other points here. Um, it is interesting also, I think, to look at. Well, I'll just say, the thing with the PPI today, but there's been all this kind of uproar over Goldman Sachs and their chief economist and everything like that. But they come out and essentially kind of say that tariffs are still going to be mostly passing through to CPI. And I think when we just look out into the future, it's hard to really, in many ways, I think, see necessarily inflation really coming down in significant ways. We haven't seen it in certain things, like, for example, the Institute for Supply Management, the price indexes, and almost all these PMI reports have remained very high. So we look back over here. I wanted to actually mention, if we look over at the long-term yield of the 10-year, for example, this was a time in late 2023, and we were talking at the time if you go back and see the webinars, and they're on YouTube, and we were talking about how the pressure was building for inflation to come down. As the market was tanking at this time in October, and we were basically saying that there was tremendous positive forces building or bullish forces building because of the fact that the deflationary trend was in place. And it took a little time, but then the turn happened and yields smash lower. But now I have to say, when we look at this, in some ways, there's nothing like that. We see the CPI, core CPI above 3%. We see PPI. I mean, I think the year over year was like over 3.5 today on today's number. So, I mean, we're looking at things now that are not really as much we want to see. And then when you look further out with people like Goldman, these other guys saying these are going to pass through, it's just something. It's not the same kind of environment we had back here when the Fed got dovish. So I think we just have to realize is that these are forces that are in place. It doesn't mean they pass through right away, but they are real. And in many ways, the amount of debt the government's going to be issuing, the weakness of those auctions, those remain out there. And I think we just have to kind of realize that right now there's no confirmation on the daily chart of the S&P. The bearishness is passing through. And I mean, who knows? But it could be something where in many ways this might be the opposite of October 2023. At that time, the market was bearish and there was good news building. Now we might be in an opposite situation when the market is bullish, but there's kind of more negativity or negative news that could be building. So that's just kind of something I wanted to look at. It doesn't mean it's going to take effect though in the next week. um, so we look at all these different kind of forces as they might develop. Now, I really do want to go back here to the Russell because it's actually very interesting to me. I think we need to kind of realize, I mean, this is a sort of, this has not gone back to where it was its all-time high before. It's not even back to where it was last November. So, I mean, people might still hear, look for the Russell to continue higher, toward the September Fed meeting. I just want to point that out as a possibility. It's one of these things like Mark Douglas says, you have to focus on the now flow of potential things that might happen, not the things you want to have happen, but the things that are potentially happening. And as I look here, I think this is something we have to realize is a potential force building. So, and again, though, it will come down to the retail sales report tomorrow. That's going to be a big sort of item. Now, it's also interesting today, as I look through also, was that one of the Fed voting members, Alberto Mussolem, basically was relatively hawkish in his comments today. And what's also interesting is I've seen a lot of articles about how the European Central Bank is not going to be cutting rates as much. Germany's going to be issuing a ton of debt, and that could keep the long end of the curve higher as well, simply because of the fact that if they're issuing a lot of long bonds, there's a certain spread to it. The American one is going to be related to that in a certain way. So these are all forces I think we have to realize are kind of out there. All right, I mentioned the big catalyst to watch, and I mentioned also communications, which remains to me in many ways kind of the most interesting overall. That's utilities, I mean, XLC. This is the one that looks to me the most interesting overall, and we had identified it on State of the Market. So there's a few things also that were kind of coming up I want to mention. Let me hide myself and we can see more things here. First of all, is a Tapestry retailer came out and basically, had, you know, impact from tariffs coming through, and I thought that was something that is something we have to kind of see that it continues to trickle through. And as we go into year end and Christmas and things like that, there's going to be the kind of question of are they going to raise prices to offset this tariff pressure they have. Now, what's also interesting is that we last week had talked about Apple having broken out of this channel. This was Thursday of last week, and we talked about the potential for it extending up toward kind of 240 area, and it's getting up there now. So I want to kind of point that one out as something that's happening here. Now, another thing that's interesting to me that I'm seeing here is, Microsoft is. It's very interesting to see how Microsoft is just holding here. So, I'm just watching to see what might happen with a name like this. I'm waiting to see if it might actually, reverse to the downside. So for me, this is one that might actually give clues on the overall market. We actually see what Microsoft is doing here. Um, Now, a few weeks ago, we had also talked about Goldman Sachs, and we had talked about people potentially doing calendar spreads, looking for this one to move towards 750, and it's kind of pushing in that direction. And for me, it's interesting here to see the way that the banks, the big Wall Street banks, Goldman, Morgan Stanley, just remain in this kind of grind to the upside. And these are names also that, on small pullbacks like to the 21-day exponential or things like that, people might be looking for entries in. So now remember, if you want to do that, you can go to our MA tools and say, for example, you put something like Goldman, you put in something like, Netflix. What you can actually see is you'll see that it lights up when it's touching one of the exponential moving averages. So Netflix for today, for example, today is at its 21-day exponential moving average, and you can see that it lights up that number right there. So for the stock like Goldman, it's above its 21-day exponential, but you can have a series of stocks on this list, and then they can pop up and then be active there. So I thought that was kind of interesting. Just some other things that I'm just looking at because, like I said, looking for opportunities and trying to wait and plan a little. Micron here. It's interesting if you look over at our rundown. We actually talked about how Micron. There was some interesting sort of news here where they basically first it was the South Korean company Hynix basically was very bullish on the high bandwidth memory market, and then Micron also raised its guidance. And so I thought it was interesting to see Micron in this channel. But at the same time, people also might want to look for this to maybe test back down closer to 115. Here it is kind of stuck at this range here. If you look here on the weekly even of Micron, you can see it has not broken out. And so I just thought this is kind of interesting to see how it kind of performs. Again, if it does, it does have the potential here to break out. And if it does, I mean, if things actually stay bullish, Micron could be one that people look for an extension back up to 150. So I think it's interesting to kind of see here, what will it do? Will it kind of sit, or will it kind of, come down to 115? If it closes much above, the area around 125 though, on a weekly, that's that weekly level, people could see an extension of this one up over 140. So I think Micron is actually pretty interesting here, MU, to kind of watch Micron. Now, on the other hand, let me actually, the other thing I'm going to show you is the dollar index. And now the dollar index, last week we had focused on the downside of the dollar, and it had essentially happened. But in some ways here, I think with the the inflation number and everything else today, there is some risk of the dollar kind of having another squeeze to the upside here. And if that happens, and some of the things we've been watching, some of the things people have been kind of focused on, like gold and everything else like that, might have some trouble. But the things that might really have trouble are stocks like Freeport McMoran. So let me show you this on the daily chart over here. But I wanted to point this one out because there's a stock here, FCX, that essentially had rallied up, and now it's stalling under the 50-day. And it's also stalling under this level around 43.5 from late June and mid-July. So Freeport here is a copper producer, had this sharp drop, and here it is just kind of stalling under these levels. This might be one where if we get some kind of hawkish news, people might look to drive a name like this back to the downside. So I wanted to mention that. Another area, though, that's interesting, and this is what's interesting about a market when the volatility is not that high and the correlation is not that high, is that you actually can see, to a certain extent, things can diverge. And one thing I thought was interesting was that platinum here may kind of, extend. So I'm watching to see what happens with platinum with this potential ascending triangle. This was one that we had identified, this breakout, and it's really been a pretty significant move. And now I think we want to kind of wait and see. It might, when you just look at it, it's making these higher lows, holding around this level around kind of 1370 as the top. But this is forming a triangle, and people might be looking at something here like platinum for some potential kind of continuation to the upside. Now, it's also interesting is Deere had a pretty weak earnings report, and I think it actually shows that that a lot of the kind of traditional industrial stuff outside of things like data centers, a lot of it has not been great. We talked about things like Union Pacific and some of these railroads really not performing enormously well. So I think also here, when you look at the industrials, these might actually be more at risk. We had talked about this one as having a pretty strong kind of breakout, and here at this point, it is holding this sort of level. But from my view, people might actually look for the XLI to kind of extend back lower. And I think this is just something to kind of be aware of, is that the industrials are very expensive overall, and their overall strength has been limited to a lot to certain areas. And I think the report from Deere today was actually a pretty significant kind of negative. So I wanted to kind of mention that. Now, what's also interesting to me is it a series of Chinese stocks. Now, one of the things that we actually did as a trading view idea today was the Hang Seng. Now, this might be undermined by the dollar if the dollar does reverse to the upside here. But I think it's really interesting to look at the Hang Seng index, which is a Hong Kong stocks, because you know if the all the hullabaloo fades happening between Trump and all that, you essentially have a situation here where you have levels that really have not been seen in over 3 years on the Hang Seng, and potentially kind of improving sentiment. So I thought it was interesting here to actually look and to see that there has been. Wait a second, sorry. All right. Capital Economics said Chinese stocks may rebound as news improves and earnings stabilize. I thought this is an interesting sort of note that these guys put out. So I wanted to mention that one as well. I think that despite the challenges China faces, the earnings have been strong in a lot of these names. So if you look at several of these companies that reported earnings today, JD, for example, had a strong earnings report. It's kind of sitting here down in the low 30s, trying to hold this level. But then if you look, for example, also at VIP's V Shop, this stock had a strong report and it's rallying on that. And then WB, Weibo, which is essentially like the social media Twitter of China. When you look at a lot of these stocks, what I'm just looking at is the fact they really haven't done anything here. So from my perspective, it's interesting. We have this whole thing tomorrow with in Alaska with Trump and Putin and everything. We've had a huge amount of geopolitical sort of issues, obviously, kind of weighing on the market. But if we get signs of those things kind of going away, if we get signs of the Ukraine situation permanently being resolved or in some way stopping to be less as much of an issue, I mean, that in some ways could actually remove some of the big barriers that have been weighing on US Chinese sort of relations. So I want to point out that some of these stocks are in spots where they've had really significant pullbacks. The valuations on them have been somewhat low, and they've continued to show strong fundamentals. I think a lot of people, these are just anathema, kind of totally off limits to a lot of people. But if we do get some more kind of improvement on the geopolitical front, and I mean, I don't know enough about any listeners to know what exactly that might be, but if you'll start to look in the direction of less geopolitical risk, less sanctions, all that sort of stuff, some of these areas like China that have been, under a cloud might get some attention, and the fundamentals in some ways have been not that bad in them. Now, another thing I want to mention is a CoreWeave, CRWV, just insanely volatile cloud computing stock. I mean, this thing was nuts with this thing. I mean, it went from 40 to like 180 in like 2 months. But they have their lockup period that actually ends tonight. So I want to mention that this is a name that is extremely volatile, and it might at some point give some opportunities, but it might be something now to be kind of watching. But I want to point out that if we do get a period of kind of selling after the lockup period, this could be something that sees more kind of volatility and struggles. But then there could be at a certain moment in time, not now, but there could be some actual opportunity for that to turn kind of the other way. Now, another thing I want to get into and want to mention briefly is that there's a series of software companies that I think we have to realize is that I've been looking at things like Intuit, and what's really interesting about these guys is that a lot of these stocks, they have not participated in the breakouts recently. Intuit it has, but look at Salesforce.com, for example. Look at ServiceNow. Some of these companies here have gotten to a spot where they are, IBM even. These are companies that have not participated as the NASDAQ goes to new highs. Tech's going to new highs, and IBM is not there. Salesforce is not there. ServiceNow is not there. Aside from Oracle and Palantir and Microsoft, you basically have nothing. None of the software names have been participating at all. So I think it's important to realize that because Intuit had a strong earnings report, and then it did well, but then it's like, oops, boom. And this to me is saying that software is now getting into some kind of crowded space. And I think it's interesting if you look also at a stock like Monday.com. I mean, these guys got really hammered. So I think there's a lot of these sort of stocks, things like Monday. If you look at the names like Wix, these are all enterprise companies. These are all the kind of like cloud, software as a service, subscription model based companies. And a lot of them have, I mean, they had a strong earnings report. Nobody cared. It got slammed lower. GoDaddy, stuff like Gartner IT. It's telling me that we are facing sort of a secular distribution, a significant investor rotation here away from some of these non AI tech names. Some of these names, they try to be AI, like Salesforce.com, but they're really not. And I think right now we're actually seeing some real degradation of breadth even inside of technology here. And again, it's not an issue for now, but remember, we're not going to be doing this webinar again until the Monday after Labor Day, when we'll be coming back with State of the Market on September 8th. So essentially here, I'm trying to kind of lay out some of the things that are kind of sitting out there. And from my view, another approach might be some of these names, such as something like Salesforce.com. If we get some rally in the market, then what happens if this thing goes back to and it hits its 21-day exponential? Does that become an opportunity to hit it, to look for downside? So I want to point out some of these tools can work both ways. When we look overall in a sort of negative area, sometimes when the market is drifting higher and being bullish, one of the techniques or one of the things we can look to do is kind of sit like vultures and wait for those bearish areas to kind of get a little bit rich again and set up for some opportunities. So I want to point that out here because I think it's very interesting to see the XLK going to new highs here, software going technology going to new highs, and then these names nowhere to be found. So I wanted to point that out. I also want to point out that the home builders, next week we actually have housing data, but it's interesting here, the ITB home builder ETF, it went up and hit that level from early early January. So this has had a decent bounce. We had talked about the potential for this to rally, and it has happened. And I think we just have to realize now that the yields here do remain an issue. I remain overall looking at the 10-year. My worry does continue to be, if you look at this on like the long-term chart, from a bullish, stock market perspective, my overall observation continues to be that this has broken this long-term downtrend here, and there's no real sense here that it has really, returned to a downtrend. So I'm just watching to see. If we can get back under 4% or something, but the 10-year here does remain an issue for me. And we have this downtrend that it basically got above, and it's been staying above that falling trend line. And it continues to make higher lows on the weekly chart. So I want to just kind of point that out, that this to me remains a big thing to watch. And again, we might have some strength for the next couple of days, but then that kind of later part of August going into early September has historically can be a problematic time, especially after something like Jackson Hole. Those are a lot of things I wanted to talk about. I'm going to quickly just mention the things in my article that I didn't actually get to. There's a series of M&A here that we mentioned, and a lot of these things, I think, though, they've been kind of happening, and they've been definitely getting some attention. Today there was another one with a Bitcoin company called Hut. Wolf, TerraWulf, WULF, TerraWulf. This company had essentially a deal with Google buying part of them. So that was interesting. So we've seen a lot of M&A kind of popping up, and it isn't hasn't one of the things driving the situation with the Russell overall. You might want to go and check out this article we did when we kind of identified things like strategic initiatives when companies do things like they put themselves up for sale, or they do spin-offs and buybacks and things like that. In this kind of environment, it's more what people are looking for. I thought it was also interesting, I want to mention this, is that Moody's downgraded the credit rating of Intel. So I find that when you get credit ratings on companies, that also, these guys they can see long-term trends. And it was also interesting that United Airlines got an upgrade from S&P. So that's just, I think, something overall that it's interesting to kind of see that kind of shift happening. Now, I also want to point out that the energy situation, we might see some weakness after the meeting if Putin and Trump manage to somehow have a productive meeting, or something that looks like the situation in Eastern Europe is going to improve. I think we remain kind of on watch for energy potentially having a breakdown here. Crude oil is kind of trying to hold. It's actually holding. I don't have it on this chart, but this is about a 50% retracement of this rally here. But I think we also have to realize is that there's a lot of negative news continuing to build in oil. The International Energy Agency yesterday actually said that the market was more bloated as OPEC pushes supply. Um, so that remains an issue. But then also in this kind of market, this kind of meme sort of market, another area that has been popping up has been some of the cannabis names, things like Tilray and stuff like that. There's some talk that Trump might potentially change some of the legal status of things involving cannabis. So these have been highly active as well. And let's see, I think I mentioned most of these other things on this list. Yeah, things like China and stuff. I'm just kind of going through, when volatility is low, it's hard to kind of have a single theme. It's the kind of all this stuff is just kind of happening. And like I said, from my perspective, in some ways, there's nothing really bearish here. But from an overall market perspective, in terms of looking for opportunities in the index, kind of waiting for something of a drop might give a better risk reward. I want to just kind of point that out. It might be difficult for the market to really extend new highs at this moment in time, since a lot of the news is now out there. And honestly, stuff like PPI, I've seen this happen sometimes, when essentially what will happen is that the news happens, it sits out there, and then after a day or two, then people start to think about it. One last thing I want to tell you guys: if you log on to watch these webinars via the website, we're going to be streaming this purely in the future through stuff like YouTube and Facebook. We're not going to have the same software. We're going to use a different kind of software coming back after Labor Day. So there is going to be a link in the education section to tradestation.com under the events list in the learn section. But it is going to be something that it will point you in the future to YouTube. So you might want to also just kind of look for live streams on YouTube. That's where they'll pop up if you go to TradeStation. If you go to the TradeStation channel on YouTube and you look under live, these will be populating there before the event. So it's great to see everyone, and we will be back. I hope everyone has a great Labor Day. We'll be back on Monday after Labor Day with State of the Market. Have a good one, and I'll see you in a few weeks.